So basically 0.17 is the material for sky, 0.19 for moon, and 0.16 for sun. Likewise, if we look at the labor cost, is 0.07, then it's 0.14 and 0.12. Right, so these are the material cost and the labor costs. Now if we look at the overheads, overheads are given in total, so we need to calculate the overhead absorption rate so that we can then absorb the overheads in the unit cost, right? So we need to do the working for that. So working 1, and in workings what I do is I calculate the overhead absorption rate, so OAR. Now in order to calculate the OAR, we need overheads, which are how much? $80,000 divided by activity level. You remember activity level? Now that we can base it on either direct labor or the direct either on the basis of direct labor hours or the machine hours, because there are two of them given to us in the question. So the direct machine hours and the direct labor hours, two of them are given to us in the question. Although we can do it under the basis of the units as well, but because there are three different types of the products, so we cannot use the we cannot base it on the number of units. All right, so two other possibilities are labor or the machine hours. Now if you look at the details given to us, if you look at the direct labor hours per unit and machine hours per unit, we are using more machine hours than the labor hours, isn't it? We are using machine hours of 0.01 for Skybar, whereas we are using direct labor hours per unit of Skybar 0.001, right? So we are using more machine hours than the labor hours. So if we are using more machine hours, then obviously we should base the machine hours, right? So how to base the machine hours? We need to calculate the total machine hours for that. All right, so let's calculate the total machine hours. So total machine hours. So in order to calculate the total machine hours, what we need to do is machine hours per unit for Skybar. Machine hours per unit for Skybar is 0.01 multiplied by number of units. These are 500,000. 500,000. Excuse me. Then we need to add the 0.04 for Moneg. 0.04 multiplied by 150,000. There's extra zero in this question. Please make sure you remove that if you have in your notes, but in my notes it's fine. So if you have a mistake in your notes, it's 150,000 units for Moneg, all right? 150,000. So 0.04 multiplied by 150,000, then it's 250,000 multiplied by 0.05. Sorry, 0.02. 0.02 into 250k. Right? Now if you add all of these, whatever the total is, that are our total machine hours. Now let me grab the calculator and do it on the calculator. So 0.01 into 500k. These are 5,000. So these are 5,000. Then 0.04 into 150,000. Excuse me, these are 6,000. And the last one is 0.02 into 250,000. These are 5,000. Now altogether 16,000. Now these are 16,000 hours. So that's what we need to base this. 80,000 divided by 16,000. So that is our overhead absorption rate. Let's calculate the overhead absorption rate divided by 16,000. So overhead absorption rate is 5 per machine hour. Right, so it is 5 per machine hour. excuse me for my writing. So it's 5 per machine hour, right? So if it is 5 per machine hour, we know now, because it is given to us in the questions, that how many hours does it take to manufacture 1 unit of Skybar, 1 unit of Monag, and 1 unit of Sunbar. So let's look at the question now. Just bear with me 1 second. So it will take us 0.01 hour to manufacture the Skybar. So 0.01 into 5. So if you put it here, 0.01 into 5, that is our excuse me, overheads. Then 0.04, so 0.04 into 5, that's for Monag, and 0.02 into 5, that's for our Sunbar. Right, so that is the cost of our overheads. Excuse me. Now we can take the profit now if we want. That will be our profit. And he also asked us to calculate the total cost, if you remember. Now the total cost will be total of these 3, so that will be total cost, and this will be our profit. Now if you could please do the total yourself. I won't waste my time to do these calculations. You can do it on the calculator. So total of these 3 costs will be our excuse me, cost per unit of Skybar, Moon, and Sun, and the profit per unit is also given to us if you just deduct this out of this one, right? So that was our this example. Now after calculating that, whatever the answers are going to be, I don't know which one. I think one of these, it was I think Monag or Sunbar. One of these you will see. One of these will be loss making, and other 2 will be profit making. So what we need to consider is that whichever the loss making is, we need to think about ceasing producing that product, because we cannot keep making the product which is giving us no profit at all. Instead, it is giving us a loss. So if we are making 3 products, two of which are giving us a profit and 1 of which is giving us a loss, so obviously we will start thinking about not manufacturing this product anymore, correct? So that's why we use these absorption costing. Otherwise, if we base these $80,000 on the number of units, then we might see all of these products are giving us a profit. So that's why we use the absorption costing, so that we can see that how many machine hours does it take to manufacture Skybar, how many machine hours to these 2, and likewise we can absorb our overheads in the units, in per unit of Skybar, Monag, and Sunbar. Right, so that's the sole aim of absorption costing. So we only use it so that we can know that how much does it cost us to make Skybar and all other on accurate basis, unlike the basis of number of units. Right, now if you come to page number 2 of your lecture notes, please. Page number 2 excuse me, of your lecture notes. Bear me 1 second. Yep. Now let me just share the screen with you as well now. Here you go, as you can see on your screen. Page number 2, over or under absorption. Now that is the actual case which I have given you on the board. Now what happens is that before actual thing happens, we always used to make the budgets, right? You remember? Now whatever the future year is going to be, we make our budget already. Now while we make our budget for everything, we also make our budget for overheads, right? Now while calculating the overheads, what we do is we calculate predetermined overhead absorption rate. So it will be exactly the same way like we did here, but it will be budgeted overheads and it will be budgeted activity level, because we are making it for budgets, right? It will be budgeted overheads over budgeted activity level. So that will be our predetermined overhead absorption rate while making the budgets, right? Now after doing that, whatever our predetermined OAR is, predetermined overhead absorption rate is, we need to calculate the overheads according to that rate, right? Now that will be our that will be our budget, and we will absorb the overheads according to that OAR. Now actual results might be different to that. When the actual results came, we might have incurred more overheads, or we might have incurred less overheads than the budget. Now whatever the difference is going to be, it is either going to be over absorption of overheads or the under absorption of overheads. Now that's what over or under absorption is all about. Let's read that. Now over or under absorption overheads accrue when overheads incurred do not equal overheads absorbed. Right? Now overhead absorbed means the budget. Overheads actually incurred could be different. Now because we make the budget, so we make the budgets and we have made the financial statements, like the management account and financial statements. So we have made that, but the actual results might be different. Excuse me. So over absorption means that the overheads charged to the cost of production or sales are greater than the overheads actually incurred. So we have over absorbed in the budget. While making the budgets, while making the statement, we have given more overheads than we should have, because in the actual case it tells us that we should have incurred less overheads. We should have absorbed less overheads. So in that case we have absorbed more overheads, so that's why it is called over absorption. And other way around is it is going to be under absorption. So means that insufficient overheads have been included in the cost of production excuse me, or sales. Now I've just given you a small example after that. Suppose that the budgeted overheads in a production department is $80,000 and budgeted activity level is 40,000 labor hours. Now budgeted overheads over budgeted activity level, like I give you the example. So it is going to be 2 per hour, 2 per direct labor hour. That is our predetermined overhead absorption rate. Now that was our predetermined overhead absorption rate. Now after that it says, suppose that actual overheads in the period was $84,000, whereas 45,000 labor hours were actually worked. Now how to absorb the overheads? While we absorb the overheads, we will take the actual actual labor hours, which are 45,000 labor hours, multiplied by 2 per hour, which was predetermined overhead absorption rate. So $45,000 multiplied by 2, these are the overheads absorbed, right? Whereas actual overheads it has given us, which are $84,000. In this case we have over absorbed the overheads, which are $6,000, right? So overheads absorbed are $90,000, whereas overheads actually incurred are $84,000. So we have over absorbed the overheads, so we have to make the adjustment to that, right? Now after that it says reasons for over or under absorption. So there could be 3 possible reasons. Actual overheads are different from the budgeted overheads, actual activity level is different from it, or both are different from each other. After that it says marginal costing. Marginal costing is another way of calculating. One was absorption costing and another one was marginal costing. Marginal costing basically is quite simple. What we do is marginal costing simply means that cost of making an additional product, right? Cost of making an additional product. Now say for example, if I came to this office, came to this studio, and I committed that I will deliver a couple of lectures today, right? My boss, when I finished, my boss said, could you please do another lecture? So obviously I will have to charge per hour after that, because I was committed, I was being paid for 2 hours, right? Or 3 hours. Now if I'm doing an extra hour, extra couple of hours, then them hours are marginal cost to my boss, because if I do not give extra lectures, these costs will not incur. So cost of producing an extra product is marginal cost. So if we do not produce that product, that cost will not incur. That is called marginal cost. Extra cost to produce an extra unit, that is called marginal costing. Extra cost to give an extra lecture is marginal cost to my boss, right? So marginal cost is the extra cost arising as a result of making and selling one more unit of a product or service. Variable cost is charged to the units, and fixed cost is deducted from the contribution. So what we do is we take the sales, then we deduct the variable cost out of it, and under marginal costing we call it the contribution margin or the contribution. Now contribution, if we deduct the fixed cost out of that, that will be our profit. But if we deduct the fixed cost in full, we do not divide it, we do not take it by a number of units. We do not calculate per unit. We just deduct it in full. A profit reconciliation. Now that is also one of the important topics that was important in F2, but logically speaking, that is very, very important for you to understand in order to understand the logic behind it. Now it says that under absorption costing and marginal costing, the profit is going to be different because of the inventory levels, right? Now this tells us about the short-term thinking. Now if we look at the long term, the profit is going to be exactly the same whether we use the absorption costing or if we use the marginal costing. However, in the short term, the profit are going to be different because of the inventory level, right? Now if the inventory has increased in the year, then the profit is going to be different under marginal absorption costing, and if the inventory is decreased, then the profit is going to be different. Now let's read from the notes. If inventory level increases, absorption costing report the higher profit, and if inventory level decreases, absorption costing report the lower profit. Now why is it so? You remember that how to make the profit and loss account, how to make the income statement. What we do is we take the sales, then we deduct the cost of sales out of it. Now how to calculate the cost of sales? We take the opening inventory, then we add the purchases into it, then we deduct the closing inventory out of it, right? Now why would we deduct the closing inventory? Because we have manufactured so many that we do not need it, right? So if we are manufacturing too many, we do not need it, then the inventory is going to be increased, right? Now if the inventory is going to be increased, that closing inventory will be deducted out of that. Now if the closing inventory is deducting out of the cost of sales, cost is going to be reduced, isn't it? If the cost is going to be reduced, profit is going to be increased. That's what it says. Right, let me also show you on the board as well this statement, which is very, very important for you to understand the logic behind absorption and cost, marginal costing. That was quite important in F2 level as well, but it is more important at F5 as well. Right, now while calculating our income statement, excuse me, let me cancel the shared screen. Now while calculating the income statement, we take the sales and we deduct the cost of sales out of it, right? Now we deduct the cost of sales out of it, and in cost of sales we take the opening inventory, we add the purchases into it, then we deduct closing inventory, right? We deduct the closing inventory out of it. Now what happens is that we add this one, but we deduct this one, right? Now if we are deducting a big lot, if we're deducting a big lot, what is going to happen? The cost is going to be lower, cost is going to fall. If the cost is going to be lower, if the cost is going to be small, the profits are going to be larger, isn't it? If the cost is small, the profit is going to be larger. Now in the other case, if we say, why would we deduct the more amount? Why would we deduct the more closing inventory? Because if the inventory has increased in the year, then obviously there will be a lot of things in the closing inventory, right? Now if the inventory has increased, there will be a lot of things to deduct out of the closing inventory. Now if we deduct out of the closing inventory, cost is going to be smaller. This cost is going to be smaller, right? And if the cost is smaller, the profit are larger. Right? Now if we do the other way around, now say for example, if the inventory has decreased in the year, if we have produced less units, but the sales was more than the production, right? In that case, what happens is that the closing inventory is going to be very small, if any. The closing inventory is going to be small. Now if the closing inventory is going to be small, the cost of sales is going to be larger, right? If the closing inventory is small, cost of sales is going to be larger, and the profit are going to be smaller, right? So hence proved that if the inventory level increases, If the inventory level increases, there will be lots of things in the closing inventory, so we'll deduct that, and the cost is going to be lower and the profits are going to be huge. If the inventory level decreases in the year, what happens is that if the inventory level decreases, there will be very small amount in the closing inventory, costs are going to be higher, profits are going to be smaller. So that was the logic behind it. Now if you could please come to page number 3 of the notes. I won't share the screen now. It's just a one page and it's just a self-study basically. What are the advantages, what are the benefits and drawbacks of these costing methods, marginal and absorption costing? Let's look at the marginal costing first. As I said, it is very, very simple to calculate, very, very easy to calculate. We take the sales, we deduct the variable cost out of it, that will be our contribution, and then finally we deduct the fixed cost out of that. It is useful for decision making as well, unlike absorption costing, which is not useful for decision making. I will tell you in a minute why it is, but marginal costing is useful for decision making. What are the drawbacks of marginal costing? Cost per unit is not as accurate as it is in the absorption costing. We know because in marginal costing we are deducting the total fixed cost, whereas in absorption costing we are deducting per unit of fixed cost depending on how many machine hours or labor hours does it take to produce one unit. That is more accurate, right? Unlike marginal costing. Not acceptable by accounting standard, right? So it is not acceptable by IFRS, unlike absorption costing, which is acceptable, which is allowed under the US gaps and the UK gaps. So absorption costing, it comply with IFRS, it comply with financial reporting standards. Excuse me. Over or under absorption helps in controlling costs. So when we know that we have absorbed more overhead than we should have, then we know that we have absorbed more. So in the next time we will try to reduce our overheads, right? So it helps us control the costs. It is very, very good. Why it is good? Because we determine the cost per unit, and it is very, very crucial, especially in the small industries, because in the small manufacturing units they care a lot about the per unit cost because their profits are smaller. Not useful for decision making, complex than marginal costing, manipulation of profit is possible. Now because the manipulation of profit is possible, because of the manipulation of profit is possible, that's why it is not useful for decision making, because there is possibility of manipulation of profits. Now how can someone manipulate the profit under the absorption costing? Could you think of any reason? How can someone manipulate the profit? Now as I've given you the example here on the board, that if say for example there was small amount in the opening inventory, but we did a big purchase, a huge purchase order. Why we did the huge purchase order when we knew we are not going to sell all of them? Why did I do so? Because if I give a huge order, despite of the fact I know that I am not going to sell them, there will be huge amount in the closing inventory. If there is a huge amount in the closing inventory, the cost is going to be smaller and the profits are going to be massive, right? So it is up to me, it is up to my manager or myself in manufacturing department, that if I know from the budget that I will sell 10,000 units, of which I already have in the opening inventory 5,000, so I should order only 5,000, whereas I order 50,000 units, so that in the closing inventory all of them which are not sold will be in our closing inventory. So we'll deduct out of the closing inventory, and net cost is going to be huge amount. Net cost is going to be a small amount, and the profits are going to be massive amount. So that's how I can manipulate the profits. All right. So that's why it is not helpful for our decision making. Please do practice question of chapter number 1. Now practice question and practice book, which is a small booklet which I've made. You can download it from accountinstitute.com. Just beneath the notes, and there's a link to it. Please download that booklet and do chapter number 1. And I will tell you in every chapter that which question you should do. Do that practice questions, and after that do the exam kit as well, which you can buy from BPP or Kaplan or whoever. All right. So you have watched the lecture, you have read the notes. go to practice book, do the booklet, do the practice questions, then go to do the kit, so that you will be well prepared on this topic and on this exam of F5. Right? So that's it for this video, and in the next chapter we will study activity-based costing. You will have seen a little bit about the activity-based costing in your previous studies, be it FMA, F2 or your degree level, but it will be an extension to what you have already seen. We will do little commentary as well, because you have already seen the calculation bit. We will revise that in a lot of details because it is important at F5, and we will revise and we will extend our knowledge which we have already seen earlier. Right? That's it, and I will see you in the next video. Goodbye.